You know when you hear that the dollar is strong against the peso or the euro is falling? What does that really mean? We see these numbers thrown around all the time, but honestly, they only tell part of the story. So today, we're going to go way beyond the simple price of a currency to find out what its true economic power is. Okay, let's get into it.
All right, here's the plan. We're going to start with a look at the biggest market you've probably never seen, the Forex market. Then we'll get into the fascinating difference between the price you see and the value you actually get. After that, I'll introduce you to the special tool economists use to measure a currency's real strength. And finally, we'll see why any of this matters in the real world.
So first things first, let's talk scale. We're talking about the foreign exchange market. Forex for short. And to say this thing is big, well, that's a massive understatement. You're about to see just how massive. Get a load of this number, $7.5 trillion. And that's not its total value. That's the average amount of money traded every single day. It absolutely dwarfs any stock market on the planet. I mean, this is the financial engine that powers our entire global economy.
Now, all this action isn't just, people like us exchanging cash for a vacation. Not even close. The biggest slice of this pie, over half, is in something called swaps. Just think of those as huge, pre-planned currency trades between big banks and institutions. The spot market, which is that instant exchange we all think of, is actually less than a third of the whole shebang.
So why does this all happen? Well, it's all driven by very real needs. A company in America buying car parts from Germany, it needs euros. An investor in Japan who wants to buy some US stocks, they're going to need dollars. Basically, anytime goods, services, or investments cross a border, the Forex market is right there, making it all possible.
Okay, so that sets the stage. But that exchange rate you see on the news, that's just the sticker price, and it is definitely not the whole story. To really understand what a currency's worth, we have to look deeper at the difference between the price and the real cost.
Right. So imagine you're planning a trip. You see the exchange rate and you think, awesome, my dollar buys a ton of pesos. But what does a peso actually buy you when you get there? Is a taxi ride super cheap? Is a nice dinner crazy expensive? That's where things start to get really interesting.
And this brings us to the main event. On one side, you've got the nominal exchange rate. That's just the sticker price, the direct conversion rate, plain and simple. But on the other side, you have the real exchange rate, and this is the powerful one. It takes that sticker price and it adjusts for the cost of living, for inflation in both countries. It tells you about your actual purchasing power.
So here's the absolute key. The nominal rate, it's just a number. The real rate, though, that tells a story. It's this powerful clue about how competitive a country's goods really are, and it gives us a much clearer picture of its economic health.
Now, that's a great start. But a country doesn't just trade with one other country, right? It trades with dozens. So how in the world do we get that whole global picture? Well, for that, we're going to need an even more powerful tool.
Let me introduce you to the real effective exchange rate, or REER. So the real part means it's adjusted for inflation, just like we talked about. But the effective part, that's the secret sauce. It means it's not just your currency against one other, but a weighted average against a whole basket of your trading partners. This is the number economists look to when they want to know a country's true competitiveness.
I know it sounds super complicated, but the logic is actually pretty straightforward. You just take the sticker price for each country you trade with, then you adjust for inflation both at home and over there, and then you kind of blend them all together. And the countries you trade with the most, they get a bigger say in the final average. See? Simple as that.
So we have this powerful number, the REER. But why should you care? Well, because this one number has massive, real-world consequences for entire economies. This is where it gets real.
As the economist Menzi Chin points out, just looking at one currency pair can be totally misleading. The dollar might be falling against the euro, sure, but what if it's rising against the currencies of China, Mexico, and Canada at the same time? The overall story could be the complete opposite of what the headlines are screaming.
And what you choose to measure with matters a lot. Take the US dollar. Economists found that if you adjust for consumer prices, basically the general cost of stuff, you get one story. But if you adjust for something called unit labor costs, which looks at how much it costs to actually make things, factoring in wages and productivity, you get a completely different and way more dramatic picture. Using labor costs showed that U.S. products were way more competitive than if you just looked at consumer prices. It just goes to show you, the data you use can completely change the story. Look, this isn't just some dry academic thing. The RER is a vital diagnostic tool for the health of an entire economy. So what can it actually tell us?
Well, for starters, it helps them figure out if a currency is fundamentally over or undervalued. It is the clearest measure of how competitive a country's exports are out there on the world stage. It can even be an early warning sign for a potential currency crisis. And because of all that, it helps guide huge decisions on national economic policy.
So, here's the bottom line. The next time you see a headline about the dollar or the euro, just remember the REER. It's the difference between looking at a single tree and seeing the entire forest. It's the one tool that gives us the clearest, most complete picture of where a country really stands in the global economy.
And that kind of leaves us with one final thought. We've seen that the simple number you see on a screen often hides a much more complex truth. So it's worth asking yourself, if the real rate tells a different story than the sticker price, what story is the currency in your pocket telling right now?